Hello everyone, welcome to JAIIB CAIIB English Medium. This side Sayati and I hope your preparation for upcoming CAIIB exams has been started. If not yet, then I encourage you to enroll in our crash courses. Along with that, I will provide you and I will give you one special discount coupon code also, but at the end of this session. So, watch this session from starting to end. And remember to subscribe this channel because in this channel we will provide you all the planning strategies, how you can clear in your first attempt, the tricks and techniques, along with that mini marathons, and these type of special sessions. So for that you need the subscription, and do share this channel with your friends and colleagues who wants to clear their JAIIB, their CAIIB, along with that any bank promotional exams, then use this particular channel. Chali, so with this, let's start today's session. So the first question is, ABC Limited is considering an investment project that involves an initial outlay of 2 lakh. The expected cash inflows from the project over the next 4 years are as follows: 80,000, 90,000, 70,000, 60,000. The company required rate of return or discounted rate we can say as 12%. The company uses the NPV method to decide whether the project should be accepted or rejected. NPV is calculated by discounting future cash flows at the required rate of return and then subtracting the initial investment from the sum of the present values, these cash flows. So what we need to do in this, we need to use the net present value. Okay? And they are defining the NPV also in this. So ultimately we need to calculate the net present value of the project. And remember, this question is your without answer question. So how to solve this? Chali, please try to use your calculator for solving this. As you can see, here are few cash flows, first year, second year, third year and fourth year. Firstly, what we need to do for calculating the NPV, what we require sum of discounted cash flow minus sum of discounted cash flow minus initial outlay. Correct? So, firstly, we need to calculate the discounting factor of this future cash flows. For that, what rate we are going to use? That is 12%. Chali. So, let's use this 12% rate. I hope you know how to do the discounting. The formula for discounting is 1 plus r to the power n. Correct? So, as you do 1 divided by 1.12, r is 12%. So, divide by 1.12 as you press single time equal to. This is your first year's discounting value, 0.893. For the second year, that is 0.797. For the third year, it is 0.712. For the fourth year, this is 0.636. Chali. So these are the present value amounts. Now we need to calculate the present value of these cash flows. So what we are going to do? We are going to do the multiplications. Okay? We are going to do multiplications. See, I am not preparing the table. Okay? Because we know that in exams they are not giving the marks for the stepwise calculations. That's why I am not preparing the table. I am just calculating direct this sum of discounted cash flow amount. So in this, what we are going to do? 80,000 into 0.893, that is your 71440. Next is your 90,000 into 0.797, that is your 71730. For the next year, 70,000 into 0.712, that is 49840. For 60,000, 0.636, that is 38,160. So if you add all these cash flows, what is the amount that you are going to get? 71440 plus 71730 plus 49840 plus 38160. So the total amount is 231170. Correct? And we need to subtract from your initial outlay. What is your initial outlay amount? That is your 2 lakh. We are going to subtract this by 2 lakh. What is your correct answer? 31,170. This is your final answer. And you know, as this is without options, so we need to type this answer with the help of your keyboard. Correct answer of this question is 31,170. These type of questions they are going to ask in your exams. Remember, this is how we need to calculate the net present value of any projects. Okay. So remember one more point, that here they have given the different type of cash inflows. Otherwise, we have used the direct method. Single calculation for if we have means if in your questions they are giving the direct or same cash flows for each year. Correct, Chali. So with this we complete this question. Next is your match the following. Again, this is without answer question, without options. So column A is like called up share capital, paid up share capital, call scenarios, paid up share capital, forfeited shares. And in column B, they are giving some few definitions of it. Like A says part of called up capital unpaid by shareholders. B, amount received from shareholders. C, shares forfeited due to non-payment by shareholders. D, capital that the company has called up from shareholders. E, final amount unpaid for which management can take suitable action. So in this, we need to do the match the following. Chali. So if we see for the called up share capital means what? Called up share capital means capital that the company has called up from the shareholders. So the correct option is for 1D. Okay, for first it is your D. Chali. Paid up share capital means what? Amount received from the shareholders, part of called up, no. Final amount unpaid, no. So the correct answer for the paid up share capital is which option? For the correct option, for second is your B. Second is your B. Third, calls in arrear. Calls in arrear means what? Shares forfeited, no. Final amount unpaid, for which management can take suitable actions, no. Part of called up capital unpaid by shareholders. Tell me. Calls in arrears means what? Calls in arrears means what? Your option A. 3A. Part of called up capital unpaid by shareholders. Okay. Now, unpaid share capital is what? Final amount unpaid for which management can take suitable action. So, for 4, it is your E. And for 5th, forfeited shares means shares forfeited due to non-payment by shareholders. So, this is your correct option. This is your correct. Match the following. Okay, this is your correct match the following. Chali. Next. XYZ Limited is a manufacturing company that issues 10,000 redeemable preference shares with a face value 100, each to raise funds for expansion. The shares have an 8% annual dividend and a redemption period of 5 years. So what are the options? Redeemable preference shares must be redeemed within a maximum period of 20 years from the date of issue for other than infrastructure companies. B, companies are allowed for issuing irredeemable preference shares according to the Companies Act 2013. C, redemption of preference shares cannot be made only from profits of the company or through proceeds from a fresh issue of shares specifically for redemption purpose. D, preference shareholders are entitled to vote on all companies' resolution regardless whether dividends have been paid on their shares or not. So ultimately, if you read the question, you might be thinking that they require some calculation, correct? But as soon as we start reading the options, in that they are asking what is preference shares, correct? They are asking what is preference shares, which is the correct statement, which is actually defining the preference shares. So if you see, the companies are allowed for issuing irredeemable preference shares, that is totally wrong. In India, no one can issue irredeemable preference shares. Okay, if we see the C option, Redemption of preference shares cannot be made only from profits of the company or through proceeds from a fresh issue of shares specifically for redemption purposes. That is also false. That is also false. Last D option, preference shares are entitled to vote on all companies' resolution. They are not allowed to vote. They are not equity. First of all, they are not equity. Okay, unless and until in their MOA they are clearly mentioning it that preference can do so, then only they can do so. Otherwise, no preference shares get this right for the voting. So, chali, let's see the first option also. Redeemable preference shares, they can be redeemed within a maximum period of 20 years. Yes, that is true. From the date of issue, other than infrastructure companies. Can you tell me what is the limit for infrastructure company? What is the maximum time limit for the infrastructure company? Do you know that answer? So as per this, if we see the question, that XYZ is what? Manufacturing company. They are issuing the redeemable preference shares. That is also correct. For a redemption period of 5 years. That is also correct. So the correct option of this question is your option A. And you need to tell me that what is the time limit that you are allowing for infrastructure companies in case of preference shares. Okay, chali. Let's see the next question. Which of the following statements about secured debentures is not correct? In this, they are asking about secured debentures, and that too not correct option. That too which option? Not correct option. A, secured debentures provide a lower rate of interest compared to unsecured debentures. B, they are backed by a first or second charge over the fixed assets of the company. C, secured debentures do not require appointing trustees for the shareholders. Appointing trustees is mandatory if the number of debenture holders exceed 500. So in this, they are asking about the debentures. And when we talk about the debentures now, so if they exceed 500 small or minor debenture holders, then for that we need to appoint the trustees. Okay. So the correct option of this question is your option C, that is secured debentures do not require appointing trustees of the shareholder. And here you can see the explanation also, like why statement A is correct. Because in this they are asking about the wrong statement. Okay. So the wrong statement is your option C. Now let's see why other statements are correct. Like if we see the option A, that is correct because secured debentures offer a lower rate of interest due to the security they provide. Correct, because they are giving you protection. That's why you are taking less risk. That's why you are getting the return comparatively less. So that is what statement A is saying. So that is true. If we see the B option, correct, as secured debentures are backed by charges on fixed assets. That is also true. If we see the D option, appointing a trustee is mandatory if it exceeds 500. Okay, so the wrong answer, incorrect option is your option C. Appointing trustees is required if there are more than, as I told you, more than 500 debenture holders to represent their interest. But as per option C, they are saying that we are not required to appoint any trustees. So the wrong or incorrect option of this question is your option C. Your incorrect option is which option? Option C. Chali. Let's see the next question. The two-stage dividend discount model is used to value a company's stock when A, the company has a constant dividend growth rate throughout its life. B, the company has an initial high growth rate followed by stable growth rate. C, the company pays no dividends during its high growth phase. D, the company's dividends grow at an increasing rate in the future. Okay, so in this, they are asking about the two-stage dividend discount model. What is two-stage dividend discount model? In this, they are saying that whatever cash flows you are generating in your business, so for few years, you are going to see some growth in that. Okay. For few initial years, you are going to see some growth in your amount. After that, you are going to receive a constant growth. You are going to see a constant growth. Means in this, you are seeing 2 times the dividend differently because of this growth differences. In a few starting years, you are going to see an increasing growth rate. Correct? After that, you are going to get the constant growth from that company. So as you can see, this is your growing growth and this is your stable growth. So this makes you the two-stage dividend discount model. So out of this given options, which correctly describes this statement? B option. The company has an initial high growth rate followed by a stable growth rate for that particular company. So this is your two-stage dividend discount model. ठीक है, चलिए. Next, ABC Limited is considering an investment in a machine costing 2 lakh. The machine has a successful life of 5 years and no salvage value. The expected earning before taxes and depreciation are 80,000 per year for the next 5 years. The company uses straight line depreciation and the tax rate is 25%. What is the cash flow for year 1? We need to calculate the cash flow that we are going to generate with this machine. So how we are going to start? Firstly, we need to calculate the depreciation. First thing, what we are going to do? We are going to calculate the depreciation. And which method we are going to use? SLM. Under the SLM method, what we do? We use the purchase price, that is 2 lakh, and we are going to divide it by with the expected life. The expected useful life is how many years? That is 5. As you know, there is no salvage value. So what is the depreciation amount in this? 2 lakh divided by 5, that is 40,000. That is how much? 40,000. Correct? And to calculate the correct cash flows, what we need to prepare? We need to prepare one statement. And that statement starts with your EB, earning before taxes and depreciation, that is your 80,000. As you can see, this earning is before your depreciation and before your taxes also. So before calculating the tax amount, firstly we need to deduct the depreciation. So what is the depreciation amount in this? That is your 40,000. Correct? So remaining amount is what? 40,000. As you can see, this is your earning before taxes. Okay? Or you can say profit before taxes. From this we need to deduct the tax amount, and the tax rate is what? 25%. So what is the 25% of 40,000? So if you calculate 40,000, 25%, that is your 10,000. That is your 10,000. So this 30,000 is what? This 30,000 is your profit after tax. This is the answer. They are asking about the cash flow. So is this answer is correct? Tell me, is this answer is correct? But in options, we are not seeing any 30,000 as an option. They are saying 60, 64, 72, 70. Tell me, is this option is correct or not? 30,000 is only your final answer? The correct answer is no. This is not your final answer. They are asking about the cash flows, and we know depreciation is not a cash flow transaction. That is a non-cash transaction. Depreciation is what? That is your non-cash transaction. But in question, they want your cash flow amount for the first year. So this is the part which is after tax. But in this, we need to add back your depreciation also, because that is your non-cash expenses. So finally, when you add back this amount, that will give you the correct cash flows in your hand. This is your correct cash flow. The correct answer is which? Yours, D option, that is 70,000. Correct option is what? D, 70,000. Remember, in that, if they are asking about the profit after tax, then surely this is your correct answer. Okay? But if they are asking about the cash flow, in that we need to add back all your non-cash expenses also, like depreciation. Though for calculating the tax, we need to deduct the depreciation, but that is just a adjustment entry. That is not a true cash transaction entry. That's why we need to add back that depreciation in the total cash flow amount. Okay, chali. So here we complete our discussion, but as you know, now we have very limited time for our CAIIB exam. So what you can do, you can enroll in our crash courses. And how you can do that? You can use the Adda 24/7 site. In that, you are going to see this home page. Okay, this home page, as soon as you click on this tab, you can see there are different exams also. In this JAIIB CAIIB November 24, in that, as soon as you click on that, this are your crash courses. As you know that we have very limited time, so you can enroll in our crash courses. As you click on this, you can see the description also, like live online class you are going to get. After that, test series, e-books. But if you click on buy now, as I told you in starting, that I am going to tell you one benefit coupon code. Currently, you can see you are getting 77% off. But as you use the coupon code, that is Y895, as soon as you click on apply, you are going to get 79% off. Okay, this is your coupon code which you can use for extra discount. Remember the code. What is the code? Y895. And remember, if you purchase the same batch through your Adda 24/7 app, you are going to get additional 1% off, means total of 80%. But for that also you need to use Y895. Chali. So with this, let's wind up today's session. Thank you for joining. If you like this session, do like in our comments and give your thoughts that how you like this session. If you are facing any issue in any particular topic, you can share that topic also, so that in next session I will be bringing the questions based on that topic. Chali. So with this, thank you for joining. Do like these sessions and share with your friends and colleagues and subscribe to our channel. Thank you.